Hi and welcome to Penser Bank and our presentation on Fingerprint Cards. My name is Markus Almerud and I'm an analyst here at the bank. So Fingerprint Cards is the leading producer of capacitive fingerprint sensors to mobile phones, PCs, smart locks and debit and credit cards. The investment case in short is that the company is repositioning itself away from mobile phone OEMs towards more stable end customer segments where profitability is higher. We have a fair value range of 7 to 8 krona compared to the current share price of just under 2. The reason for talking today is to follow up after Q2 earnings and the announcement of the convertible and rights issues. Let's start with the mobile phone market in China. So fingerprints are large with mobile phone OEMs in China. And after significant pressure on sales and earnings in the aftermath of the COVID-related closures, sales recovered in Q2 and they were actually up 74% sequentially. The issue here is price pressure. So inventories were full with sensors produced on high wafer prices, while ASPs for products in stock has fallen significantly. The result has been a grueling margin pressure. We see this pressure as temporary as inventories are emptied. Products with much lower input costs will be shipped, but we need to see inventories normalize before this happens, which would be at the end of the year. Meanwhile, the company keeps repositioning the business. The share of sales in capacitive sensors to mobile phone OEMs have kept decreasing. In 2021, other sales were 10% of total. Last year, it was 30%, and this year, the other share should increase to 45%. The key driver has been PC, but we expect access products such as dongles, access cards, gaming consoles to be an important contributor as well. The PC market has been declining. It was down 30% in Q1, by the low teens in Q2, but fingerprint sales almost doubled in the first half. The repositioning is massively important. The ASPs are higher, they're more stable, and margins are hence higher and more stable as well. The announcement of the convertible and the rights issue should be viewed in this light. The covenants of the bond has stopped necessary investment into the growth areas, and the bond is also very expensive, about twice the cost of the convertible. So what's the conclusion of all this? Well, I think that however I look at it, the share is too low. If I assume that the mobile phone market will be at the same levels in terms of volume in 5 years as it was before the pandemic, and I value this as one-time sales, which I think is conservative, it's worth around 2 kronas per fingerprint share. And then I'm ignoring everything else, all of the growth areas. If I look at it from another angle, let's look at payments, currently a small part of fingerprints. The key competitor is IDEX, also a listed company. If I make the simplistic assumption that market shares and profitability will be similar for these two companies and markets, they should be valued in line. IDEX is valued at 2 kronas per fingerprint share. I think that the market is seriously lowballing the opportunities. Risk reward is very compelling. Very. Thank you.